When a business sale closes, many sellers assume the transaction is finished. But in reality, closing is not always the end of financial risk. In many lower middle market business sales, a portion of the purchase price is held back through escrow or protected through indemnification provisions. These mechanisms exist to protect the buyer from problems that may appear after the transaction closes. Escrow is one of the most common structures used in business acquisitions. A portion of the purchase price, often between 5 and 15%, is placed into a neutral escrow account for a defined period. This escrow acts as protection if certain representations made by the seller turn out to be inaccurate. For example, if undisclosed liabilities, tax obligations, or legal disputes emerge after closing, the buyer may seek compensation from the escrow funds. Indemnification provisions define the types of risks the seller may remain responsible for after the sale. These provisions typically cover matters such as financial misstatements, undisclosed debts, legal liabilities, or breaches of representations made during negotiations. Most purchase agreements also include limits on indemnification. These limits are commonly known as baskets and caps. A basket defines the minimum loss threshold before a buyer can make a claim. A cap defines the maximum amount the buyer can recover. These mechanisms help balance risk between both parties. For sellers, understanding escrow and indemnification is essential before signing the final purchase agreement. A deal may look attractive on paper, but post-closing exposure can still impact the final proceeds a seller ultimately receives. Proper preparation, accurate disclosures, and structured negotiations help reduce these risks. In lower middle market transactions across the United States, well-structured agreements protect both buyers and sellers and help ensure transactions close successfully. EIN Business Brokers. We represent you in business sales and acquisitions. Confidential, structured, executed.